So once again, good morning, everybody. Today is a Wednesday, first Wednesday of the month. That means ADP. Wednesday, March 4th, 2015. It's 7:30 in the morning, New York time, Wall Street time. Markets are getting set to open. It's London lunch. London hedge fund managers having their fish and chips, getting ready for the second half of their trading day. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for attending today's live Forex trading strategy session. If you're watching on YouTube, hey, subscribe and give it a like. Nudge, nudge. Looking at the markets here, gold bouncing off 1200, oil back above 50. In fact, look at that, tickling 51. I got some news on oil if you want to hear about it later. SP500 coming down, mostly because NASI hit the big top, and now we're going into NFP. Yeah, NASDAQ back to pre-dot-com bomb highs, just amazing. But going into NFP, not a bad time to take some profit with the risk event. UK coming down, just doesn't want to break 70 or 7,000. I don't blame it. USD CAD off of 25. USD Yen right down to 1950. Hey, were we talking about 1950 being a possible buy zone yesterday? Remember, it was sell high and then maybe look for a buy down low? What did you know about that? Euro USD, guess what? It came down. Really? What a shock, right? And pound yen, just about 83.5, but notice it's below the midpoint cycle, not above. It's coming around. So we got lots going on today. Do you want to actually scalp the ADP news coming out at 8:15? Do you actually want to do that in this room? I'll teach you how to scalp high volatility using an event-driven strategy. All right, remind me. Beige Book comes out today. You want to know what the Beige Book is all about? How the Fed makes their decisions? And what gets discussed at FOMC meetings and so on and so forth? I can bring that up. And like I hinted at, I got some very interesting inside information. Oil prices going up or down in the near future and why. Let's talk about it in like 20 seconds. So remember, trading with leverage is risky, not appropriate for everyone. Your past performance, good or bad, never predicts future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, let's start with commodities here. What's going on with gold? Any gold bugs out there? Seems like a lot of sideways, huh? What do you think they're waiting for? Well, down, 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 down. But, let me kill this. Obviously, we don't need that anymore. Boop. Very interesting stuff, isn't it? It's come down to key support. It's an interesting level. It was important back here. Now we're here. And really what's going on is we're fairly close to a psych level. So the real psych level here is 1,000. 1,000. But there's a lot of market participants. Just think about some wealthy sheikh in the Middle East. He's sitting on a lot of gold. I mean, I was there in several years ago. I was at a high-end investing show in Dubai, and some guy was talking about one of his clients trying to unload like a ton of gold, and I'm like, a ton? And he meant it. A ton, an actual ton. Interesting, right? So there are some big players that are sitting on gold. They have a lot of gold. They don't want gold to come down below 1,000. Also, culturally, when you're in places like Asia and the Middle East, gold is more than just nice. It's a cultural necessity at things like weddings and stuff, and you just have to give it, and so everybody cares about it. So, anyways, psychologically, 1,000 is interesting. So, where would you defend it? Well, there's two places to really defend above it, right? Oops, 1,100 and 1,200. We don't seem to care that much about 1,200, but it doesn't want to go any higher. 1,100 is sort of below this chart, so we're just sort of petered out. Certainly not worth this big money, right? So that's all. It's sort of fair market value, and you should know this. When we were at 1382, which was way up at here, I was very aggressively short, but you know what? That was like over a year ago now. Then it came all the way down, and I said, I don't think it's going to break 1,000, so get held up around 1,100 as those that don't want it to go below 1,000 will start defending. Plus, it's just, that's a pretty decent price at 1,100 or less. So here we are about 1,200, and it's one of these things. We're not at 1,300, we're not at 1,100, it's just not that interesting. If you own physical gold, there's lots of carrying charges. If you own gold derivatives, it doesn't pay an interest rate. So, okay, fine. The only interesting thing going here, if you're a bull, is you might be looking at this, right? Another way of drawing it is you're at this bottom, and okay, fine. But man, I think there's probably better things to be doing. But that's that. A lot of people are in it because they need it. It's important. Gold is important for everything. For dentistry. Japan buys an amazing amount of gold just for dentistry. Just amazing. I don't know. It's just it's an industrial commodity. I mean, it's important for all different ways, and so people care about it. But as far as an investment opportunity, there's probably better things to be doing, right? All right, who wants the inside information about oil? Are there any oil traders here? Does anybody care? Should I do the next one? You're like, who cares, Wayne? Yeah, just move on. Yeah, everyone's like, yeah, just move on. All right, fine. We'll go to the next one. What? Oh, what? What? All right. Today, about an hour ago, almost exactly an hour ago, the chief commodity advisor for Citibank, the largest financial institution in the world, has said that the United States is running out of crude oil storage capacity. That there's so much oil now in the United States that there's almost nowhere to put it. That's it. Maximum capacity. He says we're approaching that, and that in his opinion, price could fall to $20 if these storage limits are reached, and it hits the news and everybody's talking about it like there's so much oil and there's no demand, and just. It's one of these things, like, maybe that's a fact, but when the average Joe hears about it, the market crashes. So that's what he said about an hour ago. Total Cushing, Oklahoma storage capacity is around 85 billion barrels. Okay? But some of that capacity is used for blending or feeding pipelines. New storage is under construction in Cushing, and there are large storage terminals near Houston, in St. James, Louisiana, and elsewhere around the country. But that's that. I mean, they're scrambling. What do you do with all this oil? Isn't that amazing? So, has that been priced into the market today? No. Nobody knows about it. Yeah. So nobody knows about it yet. So if it's true, and I don't know how far reaching his analysis is, whether it's going to happen today or 6 months from now, but it's interesting. There's a lot of oil being produced in the United States. Now, remember, I told you this a couple of weeks ago. I listened to a Goldman Sachs analyst talk about why fracking is so amazing. It's a technological revolution. It's not just access to oil. It's sort of like a punch card computer made by IBM, and then someone comes out with, instead of using vacuum tubes, someone comes out with, what did they move towards back then? What, transistors or something, like an actual computer chip. And it, boom, new game, right? Just a whole new game. So if you're in Saudi Arabia and you come across a new oil supply under the ground and you're like, hey, I think we should start pumping this oil out. You need to build the facility, right? You actually have to go out there and build something to drill down and suck the oil out. Well, that takes about 2 years, 18 months to 2 years, and probably a ton of money, don't you think? If you are in Pennsylvania, and by the way, I confirm this, a friend of mine has a friend in Pennsylvania, that's why I bring it up, that makes something like $400,000 a quarter because they're pumping shale oil off his land, and that's his royalty check, $400,000 a quarter, and that's at low prices. He doesn't do anything. He still owns the land. They just drive out, fill up a truck, and leave. So anyways, so what happens is if you're fracking, you go out, let's say, to the farmer and like, hey, we'd like to lease your land, give you mineral, you have the mineral rights, so we'll pump it out, we'll pay you a check. What do you think? And they're like, okay, sounds good. By the end of the month, oil is coming out of the ground. 30-day turnaround versus a 2-year turnaround. Now, how would you like to like let's say you're in the business of making fine wine or a quality whiskey or bourbon here in the United States, right? It takes years before you even get the product to market, before you even get a chance to get a paycheck, right? You want to be a wine producer and produce premium wine? All right, start a vineyard, spend 10 years growing the vines, and then once the grapes come out, get a bumper, get a good harvest under good weather conditions, good terroir, and then once that's done, put it in a nice barrel and let it sit for 15 years. So by the time you get paid, you're looking at 25 years before you get a premium wine. Well, same thing in using traditional oil, it takes you 2 years before you even get paid. So you put millions of dollars up front, and eventually you'll get some revenue back. With fracking, put some money in, within the end of the month you're getting paid. So you could borrow a 30-day loan, build it and get paid, and then start paying the loan back, right? Amazing stuff. So anyways, it's not just that the United States has a lot of oil, it's that it's a technological revolutionary change. It's a disrupting technology. Okay, so anyways, interesting. So we're at support, maybe sell at resistance. So we're at 51 right now, around 53, 53 and a half, 54-ish. There's lots of resistance. And if the chief commodity advisor for Citigroup is right, he's saying 20. 20. You want to know where 20 is on this chart? I may not even be able to get 20 on my chart. Oh, look. How nice is that? How convenient is that? If you sell, well, if it goes back to 60, which is a 382 Fibonacci retracement, 20 is approximately the 1382 extension. Wow, wouldn't that be crazy? So anyways, moveon.com. So do you like that type of information? Yeah? Is that the kind of stuff you expect when you log in? Yeah. Had to data. All right, stock market. You see all my easy lines? You like my googly lines? What does it all mean, so? Yesterday's high, as indicated by the thing that's yesterday's high. Yesterday's low, as indicated by the thing that says yesterday's low. One of the things I look for is sort of a trend in lows. What do you do after a lower low, guys? You tell me, you teach me. The student becomes the teacher now. Fib, thank you, Jim R. Fib, looking for what? Got a fib. Fib it good. Lower high, fine. Yeah, come on, give me some specifics. Give me some meat. Where's the beef? Next level. I mean, what is this stuff? Can you guys be more vague? I don't know. If you were to write a book, you would have to be pretty specific, right? Not just trade the lower high. A retracement between the 382 and 618. Muy bien! Excelado. All right, so that makes, okay, this is the 382. This is the 50%. This is the 618. All right, from yesterday's low to yesterday's high. How does that make you feel inside? It came back, look at guys, within the pip. Well, in this case, point. Okay? To the point. 2,108.8. Now, let me ask you something. Does that give you confidence in that market participants, no matter what size they are, this is the SP 500, this is hedge fund managers, this is mutual fund managers, this is, you know, Jim Cramer wannabes, everybody's in this. Does this give you confidence that market participants are using Fibonacci in trending markets? Yes or no? Because it's all about confidence, man. Or do you look at it like, this is a random walk? All right? This is all about confidence, my friend. How could you have confidence if the market doesn't consistently behave in an understandable way? If it's consistently confusing, then you're going to be consistently inconsistent in your trading behavior, right? So you got to look at that and build confidence. Even if you're not trading it, you got to look at it and say, wow, that was exactly 618 Fibonacci retracement. Cool. And what does it predict now? Now that we know the top was a 618, what does that predict? Teach the teacher. Close, YJ. 1382. Going to have to mark points off of YJ's answer. He missed it by 1%. So I forgot, I'm not drawing it manually. So let's manually draw from, okay, there's the range we're measuring. 1382 is 2090. Okay, it's also the weekly S2 for the S&P 500. Be a simple kind of man. Yes, we're at S1 now, and it's, let's just call it S2. Good enough for the girls I go with. Because when the week started, the projected low in a downtrend is here, and the projected high in an uptrend is here. Looks like we're fading off, right? But anyways, or sorry, daily. Sorry, today's low predicted here, today's high predicted there. But there's some weeklies in there as well. Whatever, you know what I'm talking about. All right. Interesting, eh? Aye. Don't let me forget about ADP. Might be another dumb prediction, but it could be an interesting trade from time to time. Okay. All right. So it looks like we predicted a pullback at some point here. You can see the guess. It's not that bad. Down, up, down, up, down. Just didn't get to this level. Okay, it moved sideways. But this almost reminds me of like an ascending wedge. Like, that doesn't look like it's confident, does it? I mean, it's going up, right? But you notice the divergence the whole time? And it's going up, but you notice how we're not getting like, It's just like, a little higher down. And then, a little higher down. A little higher down. Huh? No confidence. But, you know, who knows? Bank of England doing a lot. But check this out. What happens in this scenario? We were riding the 21. Okay? But we've also been testing the 55. Now we have tested and breached the 55. This is called, in my language, my people call this a step down. The 200 EMA is not an entry, it's a target, right? So we have breached the 2155. It should come back and it. It should drop eventually. I think what it'll do is it'll probably do this, okay? But it's probably going to come back and retest. And I'm going to probably also look at this kind of, I can go a little higher, okay? And sort of slam into the moving average around here. And then if I were to guess, I would also guess sort of a retest of these highs. And then, you know, I don't know. I tend to think up in the stock market, but there are definitely times to retrace. Okay. You okay with the FTSE? How many people like going over the FTSE on a fairly regular basis? Well, let's say a couple of times a week. No? Ken? Ken, do you have an outrageous accent? Ken's like, my mother doesn't say so. Prefer the DAX? Well, you know, you go to the UK, right? And everyone's got a different accent. In the United States, an Australian, a Kiwi, a South African, a Brit, they're all the same to an American, and they all sound like animals. Like if you watch a cartoon in the United States, for some reason the animal always has an English accent. Oh, quite right, quite right. All right, so let's get into the technicals. Pound yen, what do you think? Well, yen's strong right now, right? Why? Seems like some profit taking going into non-farm payrolls. If you were getting out of equities, what do you do with your cash? Right? What do you do? You buy some bonds. Stock market comes down, bonds go up, right? And you don't even have, it's not safe haven, Igor. This is just, especially in the United States, we're well past that. Nobody cares about that. It's all about making money now. You know, now that Europe has woken up, they're doing something. So to me, the whole world's changed. You know, actually, I sent a reporter at Bloomberg an email yesterday about this. You know, Australia, for example, she wrote a piece on the Aussie, and I'm like, hey, look at this in Governor Stevens' speech 3 weeks ago. This is what he said, and look at paragraph 9. But anyways, the world's different. Europe's finally getting their act together. We're finally going to get some QE. I don't know if there's going to be QE 1, 2, 3, 5. But they're doing it, and they have the mandate, which is the most important thing because they legally couldn't do it before. So eventually, and I said in the next 2 or 3 years, you're going to get a much-deserved recovery out of at least the big countries out of the Eurozone. We're already starting to see some improvement, but that's just, it's hope. I think we had that in the United States too. It starts with hope, and then you don't get the results fast enough, and then you kind of slump back into mental depression. But they're actually going to do something. Eventually, the economy is going to improve. Eventually, this is going to trickle down to increased consumption in the Eurozone. When consumption goes up, you're going to get things like new orders out of Chinese factories. So Chinese industrial production goes up. When Chinese industrial production goes up, demand for commodities outside their borders, like, I don't know, iron ore and coal and gold and steel, but that's why you need iron ore and coal, right? You just take iron ore, melt it down, crumble some charcoal into it, and now you got steel. Nice. So anyways, suddenly demand for these commodities, and also wheat and soybeans and all these things that the Chinese economy will need. So therefore, the commodity currencies like Brazil, we rarely talk about them, but Brazil, Canada, Australia, South Africa, Norway, blah, 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 blah. Right? Demands for those commodities start going up, and those commodity currencies and those commodity economies start to improve. So it really begs a question: how long does it take for the Eurozone to pump enough money into the market? When does that trickle down to the average Joe or the average Juan in the Eurozone? When does consumption in Spain and France and Germany and stuff and Italy, when does consumption at the consumer level go up? When does inflation go up? When will that translate into higher Chinese industrial production numbers? When will we see the Baltic Dry Index go back up from all-time lows back up to something reasonable? And that's why you need to be a part economist as a trader. When is that going to start happening? And when does that translate into a currency trade? But at least it's happening, right? So I'm looking at this. Yen is strong. Two things: possible repatriation, normal seasonality of Japanese yen, predictable, boring, blah 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 blah. But also we've just hit major stock markets have just hit all-time highs, going into non-farm payrolls in a couple of days. So it's a good time to take some profit, right? That's all. It's just profit. That's all I'm saying. It's not safe haven. Safe haven's for when the world is collapsing. We had that. We've been through it. We've been to hell and back. Okay? So now it's just like, what do you do? When stocks go down, bonds go up. That's it. Done. What bonds are going to go up? What are the most mature bond markets in the world? Sweden? Hey, nothing wrong with Swedish bonds. Right? Yeah, no, look, I know what you mean, but you said what you said. Right? So it's my job to make sure. So it's not safe haven. It's just people getting out of stocks, parking it into bonds, U.S. Treasuries and Japanese government bonds, JGBs. Right? Demand for those will go up, at least on the short term. Right? Interest rates will fall slightly. And then once we get through NFP, like let's say a week from now, game on. Boom, game on. Okay? Plus you get the opportunity if there's a 3% pullback, because you took some profit at the top, now you get a 3 or 4% pullback. Good, now you can buy low again after non-farm payrolls, and off you go. That's how the market works. Okay? So anyways, this is coming down. Japanese yen, strong. But, you know, again, we've been talking about this for a while now. Not that surprising. I just don't know how long it'll stay strong, but that's why we got to watch it. You know, this is only a couple of days, you know, worth of trading. It's still just kind of sideways, isn't it? It's pretty scary, because if we get any lower than this, then we're going to have a much more significant pullback. And therefore, I would look for buy zones here and here. I should probably change the color, not use green, right? Use a blue. Okay, buy zones like here and here. Currently, we're locked in here. Okay, those are my zones. Huh? Quick quiz: do you sell at support zones? Okay. So keep your eyes open. What time is it? 10 minutes to ADP. You know what? Let's just move over to ADP. Are you okay with that? Oh, let me squeeze this in about Beige Book. Okay, and then we'll do this. We'll trade, I don't know, euro. I don't know, pick one, right? All right. Just a brief thing, because today the Beige Book comes out. So, I'm actually oh, I messed up my charts, huh? All right. Well, anyways, let's use this blank thing. Let me teach you central banking policy in the United States in 5 minutes or less. Okay. You got the United States of America. Okay. When the Americans founded their country in 1776, they did it because they hated the King of England. They hated central power. In particular, central power that controls your net worth, the money, right? So what they did is when they tried to create a central bank, and by the way, it took them 200 years. They tried several times. I think it was Andrew Jackson killed their central bank at their time because there was such a distrust of central power. Every time they created a central bank, it failed or was, you know, forced to fail, if you will. Okay, so it was a real concern, but the United States went through many booms and busts throughout, let's say right before the Civil War, right after the war, right before World War. In fact, there was a big recession/depression right before World War I. There was no central bank because that was created in 1913. And there was one person in the country that saved the entire economy. And that was J.P. Morgan. So he took his rich buddies down to his hunting lodge in Jekyll Island, Georgia, and they created the Fed. Smoking cigars, playing pool. I've actually been in the exact room where the Fed was created. And here's a fun thing. When I checked in to my hotel room, I rented the penthouse suite at this hotel, and they're like, "Excuse me, sir, your room's not going to be ready. We're sorry that it's very late, but the Fed is here. Shh, don't tell anyone. There's security everywhere. But Ben Bernanke is in your room. As soon as he checks out, we'll clean it up for you, and you can check in." I am joking. So I said, "Whoa, well, hey, will you at least unlock the Federal Reserve room and let me hang out there for a while?" And they're like, "Yeah, fair trade." No joke. Anyway, so that's Jekyll Island, Georgia. So, and that's right here, the very top of Florida. So anyways, so the United States hated central power like the King of England. So what they decided to do in 1913 when they created the Fed, they decided to create 12 central banks. So there isn't actually a central bank of the United States. There's actually 12, a central banking system of banks. And it looks kind of like, what was that, 12? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Oh, and the Bank of New York. 12. Hey, wow, that was pretty good. So anyway, so they created a system of 12 central banks. Hoo-ha! How cool is that? Just like they created the United States of America, right? They split the power. The reason for it is they were worried that the rich New York bankers were going to, let's say, do things that were, let's say, not in the best interest of people in California, but totally screwed the people in Kansas. Right? They didn't want the central power of one place. So what they did is they put a central bank, let's say in Kansas City, they put one in San Francisco, they put one in New York, they will put one in Atlanta, so on and so forth, right? And there's a president of that central bank, and that president of the central bank, let's say the one in San Francisco where I used to live, they would go and talk to all the business leaders in like San Francisco, LA, Seattle, and say, hey, how's business? How's business? What's going on? What's going on? Right? And they get all this information, this financial and economic information. Boy, I only got a couple minutes before ADP. They get all this information about this local region and compile it into a book that says, this is how this economy is doing, okay? And if California is in a recession, Detroit is in depression, right? So they would look at this area and say, wow, right? Recession here, depression here, and maybe, whatever. And so these individual central banks bring this information or prepare the information about the economic data in their particular region, send it to the Fed in Washington, D.C., to the Board of Governors, and the Board of Governors compile all this information and make it available to the Federal Open Market Committee and discuss it at the Federal Open Market Committee meetings, which happen approximately, 8 times a year? Every 6 weeks? And the book that is compiled of all 12 regional reports, right? They take the 12 regional reports, they put it in a book with a beige cover on it, and because they're economists with PhDs, they call it the Beige Book, because they can't think of anything else more clever than that, because they're boring nerds. The Beige Book has now been released, and you can actually read it and figure out what's going on around the world, and around the United States, and make decisions on how well the economy is doing. Now, the Fed, and in particular the Board of Governors and the Federal Open Market Committee, are deciding what type of, should they have an expansionary policy, should they have a contractionary policy, so on and so forth, and then they make their speeches, they make their votes, they compile a statement, and then they release it to the market. And if they want to increase money supply like they were doing, then the Federal Open Market Committee just tells the Bank of New York to buy bonds. Blah! That's the Beige Book. I want to get that out. Now I need to get my charts set up because this got messed up. I clicked the wrong button the other day. I want to use this. But anyways, that's central banking in 4 minutes. That's specifically central banking in the United States and how it's different from other central banks. Woo! I like you. You talk fast. All right. Boy, that's nice. Look at that chart. Boy, look, we're right on our support line we did last week. Woo-hoo-hoo! Boy, I want to leave that one there. So let's do 5-minute chart then. All right, so here's how I do high volatility. I only got 2 minutes, okay? You ready? Set, go. The news is going to come out. It's going to move the market one way or the other. If we get a big positive response with green candles, what we want to do is allow the market to flush itself out and then come back. And if it does come back, we want to buy a Fibonacci retracement somewhere between the 382, the 50%, and the 618. Okay, it's an event-driven strategy. It's simply a pullback, and then we'll look to go long. Or the opposite's true. If suddenly the news comes out and it goes red, 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 that's fine. Then we're going to look for green, green, and then short. Okay, you got it? Ideally, it pops up and then we sell off the top here eventually. But okay, here we go. Less than a minute.
This is a 24-hour live broadcast test channel from the Trade the News broadcast.
212,000, just below expectations, slightly below the prior month, still waiting revisions.
Small business plus 94,000, medium plus 63, good servicing plus 31,000, construction plus 31,000.
Prior ADP revised higher to 250,000 from 213,000.
A notable revision higher in the prior month has put some upward pressure on Treasury yields.
December also revised higher to 275 from 253,000.
All right, so what happened? Stock market futures are likely to go up. Bond prices went up, which means interest rates will fall. No, wait, no, I think he was talking about the rate. Let's check that. No, I think in this scenario, people will buy stocks, they will sell bonds, interest rates should rise. Sorry about that. And you know what? Look at this. Very, very, very little reaction. Okay, news here. It came out what? Basically as expected. But last month, January, was revised from 213 to 250. Wow. So that's really good news, and that's what's moving. December was 250, and that was revised up to 275. Holy smokes! That's way better. So what do you think? Should you plow your money into the European economy or the United States economy? The one trick to this is what's going on over here. Now, we drew this line when we were up here, guys. Boom, boom, boom. So we are at a bottom, so that's why we prefer to sell a retracement and then hope it breaks. Okay. Now, I would hope that that's enough news for this to continue. This is really tough. I mean, you never want to sell at support. We're pretty close to support, right? And look at we touched 1.11111. How awesome! So we got to get through this line in the sand, and it's a big one, and everybody sees it. But again, we had a okay ADP. Sorry, we had an okay ADP this month. Last month, significantly revised upward, and the month before that, significantly raised upward. So the trend is up. The trend is good. So I would hope that that would be enough. But remember, you don't sell at support, so that's the trickiest part here. Okay. Let's take a look very quickly here at. Well, let's use the previous chart. SP500 futures. You'd think that people would get the green light to buy the stock market, and if they're buying the stock market, they would get out of the bond market, and if their bond prices fall, interest rates rise. Okay, so this could be interesting. Okay, so what we're hoping for, if you want the stock market to go up, is like this: up, down, up. Okay? It's not going to go straight up. It never does. Kiwi dollar just took off. Wow. So is dollar weakening on this? I wonder if the correlation is changing. That shouldn't be right. Let's see. I'm watching a lot of things right now, but dollar's losing a little bit. Maybe it's just commodity currencies. I got to be careful. But USD CAD going down, Aussie versus US dollar going up, Kiwi versus dollar going up. That might just green light on commodities, but it looks like Euro is trying to head up off that bottom. Okay, that's going to mess up a scalp, but that's going to set up a good trade another day or later today. They might just be, they might get it wrong, which is fine by me. It's just timing, right? If I'm a bear and it goes high, oh, great, I'll just sell it later. All right, so this scalp's dead. On the 1 minute chart, it's dead. You don't want to see that. Okay, that died. And I believe it has to do with this bottom being in there. So here's how you handle this. You need to decide if you're still a bull or a bear, or you think this is a reversal off that big double bottom. If you're not convinced this is a long term, because we just got tons of fantastic jobs news, so therefore what you do is simply find the next level of resistance. Because that's what we'd rather do, right? Let it rise, and then help it fall. Okay? It's very interesting. Swiss franc actually moderately strong today. Euro has been weak, right? British pound is neutral. Yen still very strong. Kiwi very strong. CAD very strong. Aussie very strong. Dollar has been strong overnight, but just having a little hiccup here on the news. But maybe it's just waiting for, the stock market open, right? But the 1 minute scalp, that's dead. And I think it's because of the long-term double bottom. Okay, right there. But you know what? I would still want to sell it high. I would still look for maybe a daily 5, or you take today's top and the current bottom and maybe you 382 that sucker. Okay. So long story short, because we're running out of time here, the ADP only makes me more confident in my fundamental bias for currency pairs like euro dollar. Okay, so if it doesn't fall here, like what did I say yesterday? Write it down on a piece of paper, put it in every room, so when you walk around your house, everywhere you look, you're going to see your note to yourself, and it's going to say sell euro now or sell euro later. And I think that's what I'm going to do today. I'll probably look to sell it higher, maybe not the 4-hour 21, but I'm going to watch it. Maybe the 1-hour 21. Okay, which would be approximately the 1-hour 21 is approximately the 4-hour 5 EMA. All right, that sounds good to me. Whew, big day, lots of stuff. Thank you for being on my team. I really appreciate it. I hope to see you tomorrow here at tradersway.com. And then on Friday, I'll be doing non-farm payrolls live at fxstreet.com. So peace on earth. The pips be with you. May your profits above average. Thank you for your loyalty. If you are watching the video version of this, give it a like or a thumbs up or subscribe. All that kind of stuff. Share the love, my friend. Share the love. See you tomorrow.